All right, so here we go, November 13th. It's 10:25. I have to get to bed here pretty soon because I have to be up at like 6:40. But anyways, here we are. We are currently looking at the news drivers for the week, and we didn't have any for Monday. So since I'm gonna make this fast, obviously not much has changed on the monthly chart since Friday. Same analysis, which is the idea that we're rebalancing the last 3 months of price action and the fact that we have already traded to an order block. We saw price react off of that order block, and we saw that react with displacement, and now we're rebalancing that. That's the same for both pairs, and it's the same idea here on a weekly. Now, I do have an entry, and I also was learning mitigation, or learning about mitigation and learning about um, breaker blocks as well. So I'm going to be, looking into that as well. Some of the idea, or I may not have a full deepened understanding, maybe a little scuffed, if you will. So with that in mind, we'll go ahead. I'll speak on my entry. I'll speak at what I'm looking at, and here we are. Okay, so on the weekly chart, here is the last up close in this consolidation range before the down move. Okay, so I went and oh, now it doesn't look right. That's kind of annoying me. Yeah, that's not it. Hold on, I'm gonna have to refine that because I don't know. I thought I had the right level marked, but I guess not. Okay. And then just move this to equilibrium. All right. So we can see that price did initially here trade to that equilibrium price point before continuing lower. Now, currently we have traded above that order block, but we've also traded to relative equal highs, and we've also traded with the actual volume to that order block. So the volume of the candle is now officially traded back into that. It's a little bit of a different story here for ES. If it'll load. I'm having connection issues, honestly. If this shit just fucking shits the bed. Yep, here we go. Whatever. Fuck it. I just don't give a fuck anymore. Here we go. Connecting to my iPhone. Oh, look, it wants to reconnect. See? Just trying to get this shit done, bro. What the fuck? Alright, anyways. So listen. Here we go from the low. And then we're currently trading into that order block. So that's the idea right now. Is now that we've traded to that order block, that we'd be seeing lower prices. And that's the same idea that I have here, just a different order block for NQ. All right, so without further ado, let's go now into, oh yeah, and I wanted to note the equilibrium as well, just since we are below that. Okay, so now we're gonna go to my higher time frame chart. Again, not really much new to be said on either of those since Friday. All right, no like new analysis. All right, so talking about quick levels, relative levels, untested highs and lows. Of course, untested low right here. All right, this most current high is untested, and of course this level of buy set as well. With my entry, my stop loss is here, so the idea would be that this is the order block since it is a consolidation, so price is only returning to that order block before continuing lower. All right, if that trades through, then that would mean my idea is wrong, and that we would actually be trading to back to this order block. But there's a few reasons I don't think that's the case here on NQ. All right, same thing, consolidation. All right, and then the last up close before the down move. All right, we retrade back to it. Here it actually trades and rebalances that inefficient leg to the downside, so that gets rebalanced here. We have this new consolidation. Then we have this order block right here before the down move. All right, we haven't seen that retraded until now, which is the reason for my entry. I'll go through my process-oriented thinking, but this is the idea, is that we're expecting lower prices for the week. So how about we go now to we'll just go to the 4 hour first. Let's look at the daily range. So now we're consolidating at that order block. We are currently consolidating inside that. Also, this red range, I don't know if anyone remembers, so no one's probably really watching this, but I remember. Listen, this is the order block that I've marked on a higher time frame, and I just used the red to outline that. So we are not past equilibrium on that. If we do see some like aggressive movement or anything, again above that order block, then that would invalidate my idea, and I'd have to change gears or look for something different. All right, so with that said, we're mainly focused here on the daily range, which is of course the same for ES, and that I'm seeing this as a form of accumulation. Now there is something as well. Let me see if this is, really, if this is gonna give me some connection bullshit, bro. This is really fucking pissing me the hell off. All right, sorry. Excuse my language. Okay, I'm really done with that. Just trying to get this done and go to bed. So, what was my train of thought? God damn it, I'm losing my train of thought and everything because this shit's pissing me off. All right, anyways, so here we are on the hourly chart. We have that consolidation, so the market is accumulating orders on both sides. Now, if you look closely here on the 1 hour from Friday, which is right here, to this current price action, let's move this here to midnight, 12 a.m. Do I have it for ES already? No, I don't. Okay, we'll move that as well. 12. All right, so mainly the point I'm making here is Friday's close, here's Friday's high, and we're actually seeing that today on Monday, we're seeing a lower high on NQ, and we're also in that order block. We're also in that 50% range. All right, here for ES, it's a little bit different. All right, but on ES, we see Friday, higher high, lower high. All right, and then here we have high and higher high. We actually broke past that high, and so this would be a form of manipulation. Now, as I mentioned in the past video, I am currently, there is a higher time frame objective that I am still looking at here, which is this void right here, because that hasn't been properly traded, or that hasn't been properly rebalanced. So that's currently where I'm focused on, mainly just that displacement right there as far as ES. For NQ, it's a little bit different. As I mentioned, we have rebalanced that. If you look back here, however, we do have these relative equal highs, and we also have this. So the idea would be that if we do trade higher than that, would be that we're only trading higher to clear these highs, rebalance this range before continuing lower. But we are seeing that cracking correlation again between ES, between NQ. We're also looking at our interest rate. So let me just start with my bigger picture perspective, which is macro market and interest rates, right? So as we've been looking at interest rates here, we'll just go to the 90 minute real quick. And then let me go back to my institutional chart. Okay. All right. So we're gonna go ahead now. We're gonna look at what the US dollar is doing. So the US dollar expanding higher ultimately means that interest rates should be going lower. And if interest rates are going lower, then that also means that futures should do the same thing. All right. So here we are currently looking at the bond market. It's the same thing here on the 90 minute. Let's go back to that. It'll ever load. All right. So here we are on the 30-year. We are making a higher high, while on, again, the 10 and 5-year, we are making lower highs. So this would be the cracking correlation or manipulation, accumulating positions above an old high, whereas this would be the opposing, this being, showing weakness on both of these. So this gives us our directional bias and helps with our bigger picture perspective. We have done, interest rate analysis and intermarket analysis between the bond market, the US dollar index, as well as futures market. So that's our bigger picture perspective. That's why I'm expecting lower prices. Now, for intermediate term perspective, the only thing I can really do is top down. I've explained my top down, but there's a few things I haven't learned yet, which is COT data and market sentiment. I also haven't learned about seasonal tendencies, and I know he mentioned micro market to macro to micro market analysis when he was talking about interest rates before he spoke on the interest rate triad. I'm not sure if that is part of this bigger perspective, but with that being the verbiage he used, I assume so. Lastly, for our short-term perspective, we have correlation analysis. So that's what we just looked at between ES and NQ, one making a higher high, one making a lower high. Our intermediate term perspective. So again, sorry, why am I going back and forth? See, I'm just tired. Correlation analysis, IPTA, which is the order block, interbank price delivery algorithm. So that's the order block I'm expecting price to. And as far as with time and price, I'm trading off of the daily. The idea I'm trading is off the daily. So as far as time and price, I really want to learn more from that. And I'm just going to say, even though I understand time and price, I'm just going to say my understanding's not there yet, okay? So here we are. All right, let me go down to the daily chart since that's what I'm entering off and explain the idea more. We're risking 1% out of a $50,000 demo count. The reason I'm doing $50,000 is the fact that I am going to attempt to get funded with Top Step, and Top Step, their lowest is 50,000. So I feel it would be a good way to demo trade with, you know, the same amount of equity. Regardless, here's those relative equal highs. We are, of course, keeping those in mind, but here's our order block. So ultimately, price should not trade above 50% or the mean threshold of that order block before continuing lower. I have explained again, you know, why we're expecting lower prices and the multiple things that I'm looking at for that. But ultimately, if this were to be violated, then again, we'd be looking for it to trade up here above these relative equal highs and to this displacement or inefficient delivery here. So that's all for my entry. That's all for my analysis. Now I'm going to do some back testing, which is the very last thing, bro. It's 10:30, 10:36, man. I'm so tired. All right, listen. So we're going to go straight to the hourly. Now, one thing I want to explain is for a mitigation block is it correlates with order blocks, and order blocks, of course, form in a consolidation. When we have an expansion move out of a consolidation, we will eventually see that return to the order block. So what I'm really getting at here is we're going to be looking at that on a higher time frame objective, a place that we would see below an old low, or a place we'd see liquidity being taken. That's where we're going to look for that. Now a breaker block is a little bit different. A breaker block is the same idea. We would be expecting that's a market structure shift, but we would be looking at a candle such as this. Here, let's look at this. So we have a low, all right, and then we have a higher high and then a low to the right. So what we would do is we would draw this out in time. All right, and then, sorry, see, this is where it gets like cruised. Especially because this gap, man, this confuses me so much. So I'm just saying, like, I'm trying to understand it, man, but I'm like really struggling. Let me go back to my higher time frame before we go on this hourly. Give me 1 second. Go to the higher time frame. That way I can like actually look at where price shifts based on what I just told you. All right, so here we go. Consolidation. We'll look at that. All right, let's also look at this as well. So we'll look at July. We're gonna go back to July 23rd. Wait, is that July 23rd? I don't think it is. That's July 28th. Okay, so let's go to July 28th. And then let's go to 30-minute. Make sure it's July 28th. Okay. Perfect. We have 1 hour. Okay, so ultimately what we'd be looking for is a high with a lower high. So buy side being taken is what we're seeing. We see that buy side liquidity taken. Then we see price trade below that low, okay, with displacement. That is a requirement. Now, we would measure the range from the middle, or from the low. Here, give me 1 second. Where is that shit? It's my rectangle. There we go. All right. And then this would be right here, this price action, trading back into it. All right, that would be our entry for a theoretic short, expecting that shift. again, this isn't enough. This is just identifying the pattern. We would need to understand why price is going to shift specifically here. We can't just look for the pattern and say that's enough. But that's what I'm doing right now, is looking for the pattern, because, man, I'm just struggling to see it. And also for the mitigation block, because it happens at a consolidation, I think I might have said it wrong, but it doesn't have to happen at a it doesn't have to happen at the top or like low of a trend, or not a trend. Man, I'm so tired. All right, listen, it doesn't have to form at like a top or low end of a range or order block. It can form, anywhere below. So let me just show you an example of that. Here we are. We have this low here, displacement below it. All right, and then we see price. Well, it doesn't actually. Yeah, you know what? I'm not gonna lie, I'm just done. I'm done right now. I'm too tired. After everything, I need to deepen my understanding, and that's pretty much it. So I'm just gonna end it off here.